Good morning, everyone, and welcome to the Sterling Seacrest Pritchard Claims webinar series. My name is Willie Kelly. I'm the Director of Claims Advocacy at Sterling Seacrest Pritchard. I'm going to turn this over to my colleague and Senior Claims Advocate, James Hopkins, to continue the opening statements and address a few housekeeping items and then introduce our speaker, Hunter Williams. James? We may be having some technical difficulties with James's microphone, so I will continue. I'd like to thank everyone for taking time out of their schedule to participate in attending the virtual webinar. Today's webinar is tips for preparing a business income loss. This webinar is being recorded and it will be emailed out to the attendees, and we will also have it posted on our website and social media platforms. We will also send out a survey later today and we would ask that you please complete the survey, which will assist us in improving future webinar series. You can use the Q&A feature to ask questions that you may have that will be answered throughout this webinar by our speaker. Hunter Williams is a Senior Director at Imperium Consulting Group based in Atlanta, Georgia. Hunter is leading Imperial's claims and advisory service in the Southeast, while also supporting claims advisory services nationally. Hunter services includes quantification of economic and physical damage relating to first property insurance claims, third-party liability claims, product recall, product liability, fidelity claims for corporate clients, risk managers, insurance brokers, and law firms. Please welcome Hunter Williams.
Thanks, Willie, for that introduction. It's hard for me to believe that at this point I've been doing this for so long, over 30 years. And I also like to say, although I still don't know what I want to do when I grow up, I do enjoy this process of solving problems and bringing people together to try to get a successful resolution to any sort of claim that we have as we move forward. Could we go for a couple of slides? Just one more, please. There we go. So I'd like to talk to you about what we're going to cover today, just as a quick overview. And every successful business interruption loss that I've been involved in, these are sort of the things that need to happen as you move through the process. Some of them are even pre-loss. As I like to say, you need to have an action plan and a communication plan, and we'll cover all of these in detail as we move forward. You want to review your policy after the event to see what available coverages are there and identify any sublimits that might pose a problem as you move through the claim process. There's also in some claims, potential strategic opportunities to emerge stronger, and we'll cover those. We used to give a presentation called "Don't Let a Good Crisis Go to Waste," and as you move through the claims process, early on, you're going to want to identify, is there a chance for us to emerge stronger from this? As you investigate the claim, you're going to want to develop a plan to restore the operations to the pre-loss levels. With what the policy typically says is due diligence and dispatch. It's not that it needs to be immediate. You do have some time to think, make decisions, identify what really is at issue, but you do need to proceed with due diligence and dispatch. And then, of course, you're going to want to measure and document the loss, and that's what I call the basic blocking and tackling. It's going to be a lot of documentation and a lot of iterations in terms of measuring the loss, but we'll see why later that's important. Once you've got that loss measured, you're going to want to negotiate that settlement. And as I like to say, there's never a right answer, but there's usually an answer that everyone can agree on, and it's supported by the documentation. And finally, once you've got that settlement negotiated, you're going to want to review that claims process. How did we perform? Did my internal team and external team perform as I expected? What about the policy? Do we have any language in there that we might want to change at renewal? So those are the kinds of things that we're going to cover today, and we're just going to go through them one at a time. So if we can move on to the next slide here, and we'll talk about that action plan and communication. One of the things that you're going to want to do, and this is pre-loss, before the loss even happens, is identify the players that you want to be on your team. And you're going to want to identify those players that can manage the process. This team should have both internal and external resources. What do I mean by that? Well, the internal team is going to be people that work for the company, obviously. But those people are going to be important. You need to identify people that can work across functions within the organization. I recently did some work for a company out in Houston. They have people within their risk management department that had contacts across the functions within the entity. So they had contacts within facilities. They had contacts within finance. So those people were invaluable in helping us gather the documentation. So when you're going through and trying to pick your team, think about those kinds of individuals within your organization and within maybe your risk management group that can really assist you in the process. You're also going to want to think about the external team. Obviously, that's going to be your broker who helped you place the policy, but that's also going to be the broker's claim advocate who has vast experience typically in these kinds of claims, and he's going to help you navigate the potential problematic coverages or coverage questions that might arise. You're also going to need to work with maybe potentially external financial people, such as forensic accountants like myself. Sometimes the claim is not that difficult. It's fairly straightforward. And maybe you don't need a forensic accountant. But other times it can be very complex, and you're going to want somebody on your side putting those numbers together and doing that analysis. You're also going to potentially want, depending on how complex the loss is, engineering resources that can consult with you to help you determine whether something might need to be repaired, replaced, or how quickly something can be done. And then sort of finally, that last part of that external team member could be a legal expert, such as an attorney who's got broad experience in policy coverage language. If you think there's going to be an issue with potential coverage questions. So let's move on to the next one. I've got this as review the policy, and anytime I get a loss in to work on, the first question I ask is, can I get a copy of the policy? Because the thing about the policy, it really does give you a roadmap in terms of what coverages are there and how the claim needs to be viewed in terms of calculation and how you're going to calculate that loss. We could get into specific details, whether it's gross profits or gross earnings language, but the bottom line is the policy is going to tell you how to proceed when you're calculating a business interruption loss. The other question within a policy is, do I have more than one policy that might respond? And an example of that comes stock throughput policies, say for inventory that you may have in a store. If I have a stock throughput policy, it's going to pay full retail price for inventory that was damaged. how is that going to impact my recovery under the property policy where I've got business interruption? And it may also say that you get to recover at full retail at sales price. It may say that if they pay you sales price, whether it's stock throughput or the property policy, that becomes an offset to the entire business interruption calculation. So that's why getting the policy is an important step in the process. The other is what options should be considered as it relates to sublimits. If we have policy that, let's say, has a low extra expense sublimit, we may want to be careful about calling something an extra expense. An example I've got is previously, after a Sandy loss, we had language within the policy that provided for extra expense, which had a fairly low sublimit, but it also had a provision in the business interruption language that said you could also make claims for expenses to reduce loss. And those, in my mind, were very different items. So to the extent we could, we called something an expense to reduce loss as opposed to an extra expense. When I think of extra expense, it's usually extra expense or pure extra expense, where extra expense says you can spend $1 to save $1, and pure extra expense says you can spend $5 to save $1. Those are the kinds of consideration, again, you should be able to find in the policy and, make those determinations, and you make the determination about what bucket it should go into prior to submitting the claim. And finally, within the policies, there's typically or can be language called an extended period of indemnity coverage. And I think it's important to maybe take a step back here and say, well, what is the period of indemnity? I always describe it as the period of indemnity is from the date the event occurred until the last nail goes into the building to complete the repairs, right? So that's a finite set of time. The extended period of coverage kicks in from when the last nail is hammered in until such time as you get back to where you were prior to the loss. Now, extended period of coverage usually has a limit in terms of number of days. I've seen it as small as 30 days, and it's gone as high as 365 days. And how does that help you is the question. Let's just say, for example, you were doing $10,000 a day in revenue prior to the loss. And when you got to the last nail driven in and you opened back up, you were only doing $5,000 a day. If you didn't have extended period coverage, you would be out that $5,000 differential. But with extended period of coverage, you're able to recover that $5,000 differential for the stated period of time that's in the policy. And that could be very helpful because when you say open up a hotel, people may not know that you're open. It may take time to get things rebooked. So it can be an important coverage, and it's certainly a consideration when you're calculating the loss. So reviewing the policy is really important prior to even getting started with the calculation. Let's go to the next slide. And this is actually one of my favorite topics because the insurance policy, can certainly be a strategic asset. There are several times that I've been involved in a claim when we've looked at, is there an option to emerge stronger from this loss? The first one I've got up here is, can you rebuild at a different location? Let's just say that 20 years ago, you built a warehouse and it was in the middle of nowhere and your trucks had no issues getting in and out of that location. Now, 20 years later, there's 1 million people living around the warehouse. takes your trucks an hour and a half just to get in and out. So you can clearly see there's cost involved because you can't do what you used to be able to do in terms of getting your product in and out of that warehouse. So if something happens to that warehouse, is there an option to rebuild at another location? There may well be, depending on what's in the policy language. So I can take the money, as long as I didn't have it, typically it's defined as a pre-planned capital expenditure. I can take the money that it would cost to rebuild that warehouse after the damage and spend it at another location that might be more beneficial to me. So maybe I go another 20 miles outside of town, and 20 years later, maybe the town catches up again, but that's okay. The other second tab here is would choosing an actual cash value settlement be beneficial? Maybe I already have that warehouse that's 20 miles away because I've had these issues with this current warehouse. I still use the current warehouse, but I can possibly move everything that I do at this current warehouse to the new warehouse I built 5 years ago. There's a language called actual cash value. And so let's say to rebuild the warehouse, currently it would take $1 million. I've been in the warehouse 20 years and the warehouse has a 50-year useful life. So although I've got a 40% useful life expended, I might be able to take that actual cash value settlement, which would be the replacement costs less what's been depreciated, and in this case, 40%. So I could collect $600,000 and spend that any way that I'd like to. So that can be very beneficial as you move forward in the process. And a final item down here is, can you obtain better or more updated equipment as a result of a loss? And the answer really is yes. I mean, typically you can't get compensated for equipment that's considered an upgrade. But I did some work for a manufacturer in the Midwest who manufactures bathroom products. They had been discussing potentially changing to a more efficient way of providing power to their foundry. They hadn't made any definitive decisions at that point. The foundry had an issue. They had an overflow. You can imagine molten lava overflowing. It destroyed all the electrical equipment, and there was an arc to the point where it really destroyed equipment outside of the building as well. To replace that equipment with like-kind equipment was going to be a 2-year process. If they went with the equipment that they had been thinking about switching to, it was only going to be a 6-month process. So we were able to run some numbers for the client and insurance adjuster to take back and say, okay, we can save 18 months of business interruption by going with this, a different equipment. Yes, it's upgraded equipment, but you're going to save so much money in the long run. And so we were able to show the carriers how this was going to save them money, and it got approved. So when you do have a loss, you're going to want to think about these opportunities, and that's why it's important. I'll go back to the initial slide, picking your team. You're going to want people on your claim team who understand the business, who have deep knowledge of the business, and who can help you maybe identify those opportunities before anything happens. But let's go to the next slide. And I've called this, restoring the operations. And again, as I mentioned earlier, you do need to act with due diligence and dispatch, but you can choose the best path forward. Due diligence and dispatch doesn't necessarily mean immediate. You do have to protect the property immediately, but you do have some time to make a choice about What's going to be best for me in the long run? And then the second point here is you've got to communicate with the adjuster. The adjuster, he's there to take the information you give them and pass it up the chain to his stakeholders, i.e. the carrier. So if you're communicating with the adjuster, showing that you're trying to mitigate the loss or that you're struggling with making decisions, they become part of the process as well. It's just things go better in the long run by communicating with the adjuster and not making decisions in a vacuum. Do you have to discuss everything with the adjuster? Certainly not. But you need to formulate your plan, tell him what you're thinking, and get his input, his or her input, I should say. So once you're discussing that mitigation plan with the adjuster, you may say, hey, we want to rebuild the warehouse here, but we need a temporary warehouse. And get their buy-in to getting that temporary location and approving, if you will, how much it's going to cost to get that temporary location. Because that's going to show, hey, it's going to keep us in business. We're going to be able to ship product out of here and it's going to cost less in the long run if we go ahead and get this temporary location rather than just completely shutting down. There are things that come up sometimes in that temporary location. Maybe where you want to go to is requiring a 6-month lease, but you only need it for 3 months, or at least it's estimated you need it for 3 months. The carrier and the adjuster, if you're upfront with them, they can approve that, and approve should be in quotes really, because I like to call it negative assurance. If they didn't say no, then it's hard for them to come back 6 months later. If you've told them what you were going to do, they didn't object to it, to then say, well, we're not going to cover that. I think that's an important tip. Again, keeping them informed as you go through the process. So let's go ahead and move forward to the next slide. And this is titled, measure and document the loss. And I like to call this the basic blocking and tackling. Just like real estate is location, location, location. Claims is documentation, documentation, documentation. And if you think you've gotten all the documentation you're going to need, you're still going to get questions about more documentation. I've been doing this 30 years. I don't think I've ever given somebody a claim where I didn't get a request for information. Can we see more documentation? Can we see this or can we see that? It's just going to happen, and that's fine. That's okay. You want to get as much documentation as you can because it's going to help you support the claim, but it's also going to help you make decisions about what's the best claim to put forward. Typically on the business interruption side, the documentation is going to include, the budgeted financial data, the actual financial data, the actual detailed financial data. And when I've put these claims together in the past, I like to do it 2 or 3 or 4 different ways to the extent that we can. I like to look at it budget to actual, and then I like to look at how the actual is trended compared to a previous period. So if my budget to actual, let's just say my budget is 110% of actual, I could use that 110% to project forward based on that budget number to come up with my projected loss revenue. If my trend percentage, say a year-over-year trend is 115%, I can take that 115% and project using the previous year's data, because sometimes you have cyclicality, sometimes you have seasonality. Use that data to project forward my projected revenue, and then compare it to the actual revenue that we received during that time frame. That's what I talk about, doing it 2 or 3 different ways. And it gives you some comfort if you've done it 2 different ways or 3 different ways, and one is 10 million, one is 9.8 million, and one is 10.2 million. then I know I'm at least in the ballpark. If I do it one way and it's 10 million, and I do it another way it's 7, and another way it's 6, there's something askew. I've got to figure that out. Because regardless of how you present your claim, the carrier and their forensic accountant are going to want to look at it potentially a different way. So it's just good to know that going in, what might happen. So you can sort of manage expectations internally about what the claim ultimately might be. The other thing that in terms of measuring and documenting, anytime a claim happens, it's ideal that we put together a general ledger code, a separate code, so that we can capture all of those costs, whether that's just a general ledger code, whether that's a work order number, if we're rebuilding something and using our own internal labor, those costs that go to repairing the claim or repairing the damage should be captured in a separate code so that we can then take that data and just hit a button and look at all the detail behind that number. We can, if it's an outside service, say a contractor is putting on a new roof, we can make sure that we've captured that in the invoices that we've received from that contractor. If it's our own internal labor that's repaired that, we can show the hours that they worked on each day in terms of what actually got spent, the expenditures for that day, by looking at that work order. I've already talked about preparing the various analysis and projections here. But the key in measuring and documenting your loss, is that you're going to have a fully supported claim that's going to be the basis for your discussion and settlement. And it's just much easier when you go into a negotiation to have that claim fully supported. Let's move to the next slide here. Again, negotiating the settlement. I think I mentioned earlier, if I didn't, I should have. Business interruption is subjective. And I've always believed there isn't a right answer, but there's typically an answer that everybody can agree on. Is reasonable, it's supported by the documentation, and it makes some sense. As I mentioned earlier, there are accepted approaches to analyzing the loss, say budget to actual trend. The carrier's forensic accountants will recognize that when you present it to them. It's not that they won't do separate calculations, but at least they'll be expecting that kind of calculation initially, and they can quickly review and analyze it and see what the potential exposure is. So by utilizing these supporting documents, and I like to say the facts of the loss, because it's always a good thing, if you will. It's always good when the story and the numbers match. If you've got a situation where the story and the numbers don't match, there's more explaining to do. I'm an old guy, so Ricky, Ricardo, and Lucy, you got explaining to do, Lucy. I mean, it's nice to have the facts of the loss match the loss that you're calculating. And if you've got all that, then it's going to allow you to maximize that insurance asset. Notice I didn't say maximize the claim. We really want to maximize the insurance asset and what that policy provides in terms of coverage. We want to be able to take advantage of, because you've paid the premium and you've done the hard work of putting that claim together. Let's just go to the final slide here for, it's the review process. What's the claim? I call it the claim postmortem, right? Was there language in the policy that was problematic as part of the claim? Maybe when we go through that renewal process, we can think about making those changes. I think of a lot of the language that's getting litigated right now is physical loss versus physical damage or loss, or physical loss. Two very different things in many people's minds. So is there language that can be updated in the policy? Are there coverages you might want to add? I may have mentioned briefly ordinary payroll coverage. Maybe I didn't have enough ordinary payroll coverage. Maybe I had 30 days of coverage and I was down for a period of time that I wish that I had 90 days. That's something that you may want to add at renewal. But again, that's why this review of the claim process is so important, because when you go to renew the policy, you can determine the cost benefit of, okay, the premium increase from going to 30 to 90 days may not be good enough to buy that extra coverage, but at least you kind of know those numbers and what it might have cost you in the process. And again, how did my internal team function and how did my external team function? Do I need to maybe change some players, or is there an opportunity to bring more people on, or do I have sort of a master service agreement, when an all-call agreement, if you will, when something happens, I just call them, and all the contracting and all the issues are out of the way. We just bring those people on board. And I've just recently done that for a large telecom manufacturer, where we went through a process of essentially getting us onboarded. And so the next time something happens, we won't have to go through that laborious task. So Willie, I don't know if there were questions that came through while I was talking, but essentially that's what I had for today. If we can go to the next slide, I know we've got questions. If you click that button one more time, it's got my contact information on it. If people don't have questions today, I'm always available for a conversation, even if it's just, what do you think about this? Doesn't require a full engagement. Again, I've been doing this for a long time. I have some thoughts about how things could be done or should be done, but I'm always open for a conversation. Shoot me an email, text, call. I'm available. So thanks for letting me speak to you guys today.
Thank you, Hunter. Hunter, I do have a question for you.
Yeah.
So what are one or two kind of common mistakes that you have seen in your years of doing it, kind of across the board? So it doesn't matter what industry or anything like that, or even whether it's a loss due to a fire or a loss due to a hurricane. What are one or two kind of common mistakes that you've seen, and even mistakes that you may have seen even from a broker standpoint, or kind of the role that they've played in addition to the insured, if you want to kind of expand on that and provide some thoughts?
Yeah, I don't know if I'd call it mistakes, maybe speed humps, if you will. A perfect example might be what's happened in Texas recently with the freeze. Maybe there wasn't a deep enough dive into the causation, the peril, the trigger of coverage. It just looked at holistically, right? Sometimes different coverages have different distinctions, not the word, but limitations, if you will. Physical damage, in my mind, is always your best area of recovery. But then you look into service interruption, and the language within service interruption can be vast and broad, or limited as well. Sometimes it may say that the damage to the provider has to be within 1,000 feet of the facility, or a mile, or 5 miles, for example.
And they'll exclude overhead power lines too.
Yeah. Okay. So you've run into that as well.
I have run into that, and I've run into that where, and I didn't mean to
I'm
kind of
glad
steal
you
your
did.
thunder, but run into it where essentially the carrier pushed it back onto the insured and said, well, you figure out how the service interruption or power loss occurred.
Right. No,
and write to your utility company or call your utility company.
And That's happening now in Texas. And I'm not an attorney, so don't, but as there are reasons why they push it back on the policyholder. Another example of that is after Hurricane Matthew, I was working for a aircraft manufacturer in Kinston, North Carolina. They had a substation that was theoretically within the prescribed limit in terms of distance. But the question became, to your point, what caused the outage? They didn't have flood insurance. So did the substation, if it was, the outage was caused by flood insurance or flood, it was not going to be covered. And to your point, it became incumbent upon the policyholder to prove what caused the issues and the power outage.
Yeah.
So that is one thing that you want to do as much of that research upfront as you can, but at some point you also have to get the claim into the other side's hand. So it's a balancing act.
Yeah.
Because they're asking for information, because they're trying to set their reserves. So again, you want to work with them as much as possible.
Yeah, and real quick before we end, I saw the same thing in Houston with Hurricane Harvey as it relates to civil authority.
Right.
Because you had the mayor, or you had the governor, but you also had the local leaders within the city kind of declaring emergencies as well. And again, it was the carrier kind of pushing back, saying, well, go to the state's website or go to this city's website and kind of figure out when the mayor kind of declared kind of civil authority and a curfew or whatever it was.
Same thing with ingress egress. The language in there, to your point, how can we make it better? Prohibited ingress egress versus allowed reasonable access or hindered. Those are specific terms that have different meanings. And we ran into that after Harvey as well.
Well, thank you, Hunter. There are no other questions. We'd like to again thank Hunter Williams in making today's presentation possible. I'd also like to thank Katie and Bianca with Sterling Seacrest Pritchard for their assistance as well. Again, the survey will be sent out, so please complete the survey and let us know, provide your thoughts and feedback if there's a specific topic that you'd like to hear or see in the future. And make sure you let us know and email that survey or respond to that survey and send it back to us. This concludes today's Sterling Seacrest Pritchard webinar. Our next webinar will be on December the 2nd, so please look for the save the date. Thank you, everyone, and have a great day.